Welcome back. Let's get into your market picture now. In Asian markets mostly rose on Friday, with investors treading carefully as that China-US trade talks ended with no deal, but with both sides sounding notes of optimism and setting up more high-level meetings later this month. Now, after the much-anticipated gathering, Donald Trump, the President of the United States, hailed tremendous progress between the world's top two economies, but he did warn that the hard deadline of March the 1st remained in place, after which U.S. tariffs on billions of dollars of Chinese goods will be imposed. It was a vastly positive day, however, across the Asian market, with Tokyo's Nikkei managing to edge up, however, to 20,788 points. The Hang Seng mostly unmoved, while the mainland's Shanghai Composite as well moved 1.3% to the good on that front there. Over to the United States now, and Wall Street extended its rally on Thursday as strong earnings from Facebook added optimism after the Federal Reserve's dovish remarks the previous day. While investors waited, however, for the outcome of the US-China trade talks, the Dow Jones Industrial inched lower to 25,008 points by close. The S&P 500 managed to gain 0.8% to 2,704 points, while the Nasdaq Composite continued its recent rally, jumping 1.3%, and that on the day closing at 7,218 points. Seems like a pretty mixed picture across Europe as well, and things certainly aren't necessarily going the way you'd like, but it has been a much better month, if we're talking just about January, that is, compared to December, of course. So perhaps a delayed Christmas rally, if you want to call it that as well. But let's zone in on those numbers and see exactly how the market fared. A lot of negativity across the board with regards to South Africa's JSE, and that market going down around 0.7% there, still below 54,000 points on that front. The only ones going up thus far seem to be the gold counters, which are adding some hope for those resource stocks as well. But I thought we'd touch on the week that was, of course, as we usually do on a Friday, and just unpack the big elements to have come out this week. And one of the first of those is Jerome Powell, of course, the Fed chair in the United States, deciding to keep things on hold when it comes to interest rates in that country, and that certainly has helped a whole lot of emerging market currencies, particularly like South Africa's one as well. So he decided to stay pat on things, and his message really in that was, in light of global economic and financial developments and of course muted inflationary pressures, just to add of course that they are trying to target inflation at a particular range as well. The committee will be patient as it determines what future adjustments to the target range for the federal funds rate may be appropriate. We still see strong labor market conditions and inflation near 2% as the likeliest case. The case for raising rates has weakened somewhat. So certainly a picture that has helped a whole lot of currencies, including our very own, which has now gone all the way right through to 13.20 Rand, and that has also been because of the trade numbers. So that's not just the only reason. Back home yesterday, we saw that number go to around 17.2 billion Rand with regards to that trade surplus, the highest trade surplus we've ever achieved. But despite it seeming like good news, let's remember that it doesn't necessarily bode well when you have imports to have come down, which is, of course, a big primary factor to this. So we had less imports and our exports still remaining similarly at the same levels it has been for some time, which means that we aren't consuming as much as we used to, and that then takes you right back to that growth picture in South Africa, which of course isn't as high as one would like it to be. So those numbers there certainly really doing very well, and of course, according to Bloomberg's data, it's the highest trade surplus that we've had at least since 1999, and records could of course are broken, rather should I say, in that regard. And that's the figure, as you can see on that front, exactly how things have been since the beginning of that data. Now, ShopRite has been a big faller thus far, particularly this week, and it has stuttered along. And this week it came out with a trading update which said that their earnings profit may fall between 26 and 36%. That then saw the stock collapse almost basically at around 14%. That's in midweek trade on the 30th of January there. So a big fall on that front. As you can see, try to recover ever so slightly, but sadly not enough, of course, around 6% with regards to the recovery up until yesterday morning. We will continue to see how that fares for the rest of today as well. But that big fall throughout the whole week, around 17% to get that share price just below 160 Rand a share. And it has obviously impacted on the remainder of the retail sector as well. So if you take a look at the other retailers, that has also not fared too well when you saw that drop as well, particularly this month. And this is a month-on-month picture now. For the entire month, it doesn't seem to have been a great month for the retailers. They've fallen 2.15%. But this in particular is the segment that we're talking about when it comes to this week. And as you can see, things are trying to make a steady recovery in that counter, but things not working out as it would have wanted at this stage. So it's been an interesting one, of course, and we will get to that picture as soon as possible. Of course, we do also welcome our viewers on channel 404 as we unpack the market picture and see exactly what is going on. So as you saw there, of course, the Rand hitting around 13 Rand 26 against that US dollar picture, the Fed chair and the trade surplus numbers all doing us a whole lot of favors, of course. So let's unpack that now with Warwick Lucas from Galileo Capital, as we do on a Friday. Warwick, thank you so much for the time. It's a sad picture today, but it has been an upbeat January, hasn't it?
It certainly has, Arabelli. I mean, the Fed stepping away from their hawkishness, I think, has been quite a nice game changer for the first half of this year, certainly. And I think it takes quite a lot of pressure off those US markets.
If you take those that US market picture, a lot of it would have been taken in the US shutdown, which is now gone by, but although it's still a bit tentative considering that Donald Trump has given them around 3 weeks to find a solution there. You still obviously have the fact that he's trying to get that border wall done, but the US-China trade talks, yes, some optimism, but still no conclusion. That must be one sticking point for those international markets.
It certainly is a concern, and I mean other issues haven't gone away either, such as Brexit and the potential impact of Brexit on the EU, although that appears to be receding somewhat as well. But I think the big concern out there was that the Fed was going to overdo it. Instead of engineering a soft landing, it was going to cause a hard landing.
Yeah.
And I think for the intermediate term, certainly, that fear is gone. Other issues haven't gone away. They have to be addressed. But in the meantime, one big risk has been put to one side for the markets, and that's got to be a positive.
Yeah, certainly. Just to note to our viewers as well, just very quickly, of course, India has come out with a report, and now they've long been awaited to bring out the unemployment figures, and that hasn't come out of yet. But a newspaper report says that it may be at its highest figure in 45 years with regards to unemployment in India, and that won't bode well for Narendra Modi, the president of India. Of course, that number, 6.18%. We'd only dream of numbers like that to be our lowest in 45 years. At the same time, then you see a recession out in Italy. That doesn't bode well as they enter a crisis themselves. All of that and the impact on South Africa as an emerging market, do you think this year is going to be still as symptomatic for South Africa to be facing global issues like that?
Well, I think one of the things that South Africa has to see come right in the year ahead is our own local economy and how do we handle our own dinner table. And I think we saw a decent trade number there coming out in December, and that's quite encouraging in that it suggests that the Rand at the levels it has been actually is quite defendable, certainly in trade terms. So hopefully we see a little bit of a floor come under the Rand, which in turn puts a floor under inflation and hopefully provides a basis for consumers to refine some of their confidence.
Some would say we need a weaker Rand to even better improve that trade picture. Would you agree with that sentiment? Or, I mean, we're currently sitting at a competitive level, wouldn't you say? Competitive
and stable. You know, volatility in a currency really is murder over the long term. You really want to see something that's stable and sustainable.
Yeah. If you take that trade number, apply it to what's happened to the Rand then, how does that bode for the remainder of the year? Yes, it is an anomaly, so to speak, because the December or November figures generally are those where you get a lot more imports for that December rush. But, you know, does it set up a good picture for the first quarter of 2019?
I think it does. I mean, it sort of gives a sense of light at the end of the tunnel. Yes, I mean, we saw the JSE looking a little bit negative there, but I think it's important for the viewers to bear in mind that the stock market and the currency sometimes go in opposite directions. Sure. In that a stronger currency means that all of our offshore listings aren't quite rated as much, and it's more of a technical drop-off than some kind of Machiavellian influence.
Yeah.
There.
Let's go back to a story that I also touched on there when I was back at that wall there, and that's a big fall in ShopRite. This week has been a torrid year, expecting possibly the worst earnings in the company's history, according to one analyst. Would you bear that sentiment as well? Would you share a similar sentiment? I mean, down nearly 36%.
Yeah, no, look, that was pretty ugly, but I think it's also important to note a slightly different environment in that for the first time in a long time, we actually saw deflation or falling prices in a big part of the ShopRite basket. Now, it's important to appreciate amongst retailers that quite a lot of their money is made from the fact that they buy something, sure, and they take a markup and take a turn on it, but they also then have a delay in paying those suppliers. Now, yes, that's fine when prices are going slightly up through inflation, but when you have deflation, that's quite a savage pressure against how the retailer's business model works, and there's no question that will have hurt. Yeah,
and the general retailers are feeling it very hard, right? I mean, you saw the knock-on effect even on the likes of Woolworths as well, feeling it this week.
They are, absolutely, but what's quite curious is that your more cyclical retailers, people who sell discretionary stuff such as clothes and widgets and so on, aren't feeling it as badly as the food retailers because deflation happened in food.
Yeah. All right. Well, an interesting market picture. Really appreciate it, Warwick. And we'll continue to unpack market data. Of course, we are expecting those vehicle sales numbers as well to come out. It is the first of the month, so we'll hopefully get some economic indicators with regards to that. Just how well are we doing? Perhaps great on the export side, but let's remember that the desire and the need and the demand for local vehicles may not be as great across the globe as they also look towards themselves. But we'll continue to unpack that market picture. For now, that's where the buck stops. It's back to Nzinga right after the short break. Do stay tuned to On Point.